Great to be here. Well, there is evidence from a variety of international studies that as we move higher in terms of corporate debt ratios, we start to have weaker investment and weaker GDP growth. There are some estimates that would suggest, for example, that the kind of rise in aggregate corporate debt to GDP in the advanced economies that you just mentioned of around 10% of GDP could cut long-term growth by as much as 0.2% per year. That's an aggregate effect. I think there are other issues as well. I think we are concerned, for example, that the coronavirus crisis may crystallize some pre-existing risks in the corporate debt sphere in areas like low-rated debt, commercial real estate, and it might also lead to some new concentrations of risky debt. One area that we're particularly concerned about is small firms who may in some cases be borrowing substantially for the first time as an attempt to get over the shock in sales caused by the coronavirus.
It seems pretty obvious to me that if companies have to pay their debt back, they're not going to be investing, raising wages, whatever the other uses that they would typically use their capital for would be. And that has to be some kind of break on growth. Now, the break that you've described isn't huge. We're talking about 0.2% per year, but we're in a pretty low growth environment as it is, so it's not great. What could governments do if they wanted to try to accelerate this balance sheet cleaning program? I mean, how can we get through this more quickly to try to get back to the other side of it?
Yeah, that's an excellent question. I think this is something we are concerned about, that we move, when this crisis is over, into a period of extended balance sheet cleanup by corporates, which will weigh on investment over a long period. And how to prevent that? Well, there may be a couple of possibilities. One issue you could look at will be whether or not there's be changes to the tax code, which could accelerate that process and encourage investment to stay up. That will be one issue. Levels of taxation more generally could be reduced for the corporate sector. And conceivably, governments could look at other ways of lowering other business costs so that the increased amount of debt service that firms will have to pay will be offset, if you like, by reduced outlays in other areas. So I think that's the sort of thing people may have to look for. Governments, I think, are also going to have to be very wary of moving to tighten up fiscal policy, even though budget deficits are going to grow rapidly this year. They need to be very wary about tightening that up again in the years after the coronavirus crisis subsides, because by doing so, you could actually accentuate what we think is already a risky situation.